Hello everyone, welcome to our today's session, IAS 16, which talks about property, plant and equipment. First, we will go through the objective. Objective of this standard is to prescribe the accounting treatment for property, plant and equipment so that users of the financial statement can determine information about an entity's investment in its property, plant and equipment and the changes in such investment. So what it really means is this standard will guide us how we should record property, plant and equipment, also known as fixed assets, and what should be the accounting treatment throughout their life into our books of accounts. For this standard, IAS 16 is applicable to all property, plant and equipment, except when another standard prescribes a different accounting treatment. So basically, these 5 standards listed here, IFRS 5, 6, 16, and IAS 40 and 41 are the exceptions to IAS 16. When these 5 standards are applicable, we don't apply IAS 16. Otherwise, we apply IAS 16. Recognition. How we should recognize an item as property, plant, and equipment. So the first condition is, it is probable that future economic benefits associated with the item will flow to the entity. It's the basic definition of asset. And cost of the item can be measured reliably. That is the second condition. Of course, if we cannot measure, we cannot record it. So when these two conditions are met, we can recognize the item as an asset. Elements of cost. So which cost we should capitalize? There are 3 groups we can see here. First group is purchase price and the related cost to the purchase price, like import duties, non-refundable tax. If it is refundable, we cannot capitalize, and we should subtract any discount or rebates we get on the purchase price. Second group is directly attributable cost. We will explain it in more detail in next slides. And the third group is initial estimate of the cost of dismantling and removing the item. What it means is, suppose you have a machine that has an useful life of 15 years. After 15 years, we cannot use it as a machine, it's just a piece of junk, then we should remove it from our site. And we need to spend some money for the removal. So what we need to do now for the capitalization, we need to convert that removal expense after 15 years into present value today. And then that present value we need to capitalize. So let's see one example of directly attributable cost. This guy in the picture is planning to buy a laptop, and he has requested one of his IT expert friend to go with him to the computer city to buy the laptop, and they both went to the shop and bought the laptop. The purchase price of the laptop is 60,000, and after he purchased the laptop, his friend is asking for a treat, and he is thinking whether he should give a treat or not. And then finally they ate together in a restaurant, and the bill of the restaurant came for 1,500 and the transportation cost was 1,000. So now the question is, what should be the cost of the laptop? Is it 60,000, 61,000 or 62,500? The answer is 61,000. Let's see why. If we analyze the cost, you can see we have purchase price here, which is not avoidable. Treat to the friend is avoidable, and transportation cost is also not avoidable. Any cost that is related to the asset and it is necessary to bring the asset to the site and make it usable for its intended function are capitalized. So here, treat to the friend is avoidable and it is directly attributable, but this is not necessary for the asset to make it usable or to the site or anything. So this is avoidable and it is not capitalized. So here are some basic common example of directly attributable cost. We can see here the cost of preparation, initial delivery and handling cost, cost of employee benefits arising directly from the construction or acquisition of the property, plant and equipment. So when some employees are dedicatedly working to build or construct the asset, and we can measure the cost separately that is related to the construction of the asset, we can capitalize it, and this is a very good example of directly attributable cost. And the third section, we can see cost of testing, whether the asset is functioning properly. So as we said before, any cost that is necessary to bring the asset to its intended functional use is directly attributable and it is capitalized. So testing is an example of such cost, and obviously installation and assembly, those are also directly attributable. Here are examples of some costs that are sometimes confusing to us, and we think whether we should capitalize it or not. So these are some of the costs that we should not capitalize. So let's take a look. Cost of conducting business in new location or with new class of customer, cost of opening new facility, cost of introducing new product or service. All these are expense, but we cannot capitalize this under any current asset. Administration and other general overhead costs, these are periodic costs and these are not capitalized. Cost incurred in using or redeploying an item. Here is another very good example. You can see the many costs are listed here, and we will see which cost we should capitalize and which cost we should not. So purchase price, freight charge, advance income tax, advance VAT, port penalty, local transportation, installation cost, initial testing production cost. Testing production is like a production run, but it's for the test, and sale proceed from the testing production. And the answer is, you can see that we are capitalizing all the costs except for two. Advance income tax. Why we did not capitalize it? Because this is a refundable expense. So because it is refundable, we don't capitalize it. And port penalty, this is not refundable, but this is avoidable. We pay penalty whenever we do something wrong. That's why it is avoidable. We don't capitalize it. And also pay attention to the last two items. We are taking net expense 50,000 for initial testing production cost minus sale proceed from the testing production cost. So we are taking just the net expense of the initial testing production cost, 50,000. Another important point is labor cost. When we have some labor costs that are directly dedicated to the construction or acquisition of the asset, we should capitalize it. So like site workers, in-house architects and surveyors, these are directly related to the specific asset in question. So we should capitalize these costs. Training cost. Usually training cost normally we don't capitalize, but in some very rare cases we can capitalize training cost, but there are some conditions like as a major expense for the training, and the personnel you are trained up, they're expected to remain with the company. Maybe we have some contractual obligation with them that they cannot, after they get the training, they cannot leave the company for certain time, certain years, and we may give them some so attractive incentive that it is expected they will not leave the company. So in those cases, we can capitalize the training cost over the life of the asset. Other important points, One is internal profit. So when we self-construct an asset, we don't capitalize it based on the market price. Whatever we spend, even if we spend less amount to build the asset compared to the market price, we still don't take the market price when we capitalize it. We just capitalize our cost. Similarly, if the self-construction cost is abnormally high due to wastage, we don't take into account the abnormal amounts of waste. So we capitalize that is normal for the expense for the construction. If any asset is used to develop another asset, then the depreciation of the asset can be capitalized. What it means is, suppose we have an elevator or crane to build a building. Those elevator or crane are our assets too, but their depreciation, because they are dedicated to build the building, we can capitalize their depreciation as the cost of the building. Another 2 points I want to highlight is maintenance and repair cost and major maintenance and repair cost. So regular maintenance and repair cost are periodic expense. These are just regular general expense that we need to spend to keep the assets in its functional condition. But major repair maintenance, if we spend something major that increase the useful life of the asset, then we can capitalize it. Like regular oil change of a car, it does not increase the useful life. But if we change the engine or the suspension or any major part that actually increase the functional value or functional capacity of the car and also the useful life of the car, it can be capitalized. On next video, we will talk about depreciation. And if you have any question for this video, for the cost and recognition of the fixed asset, the topics we have covered so far, please let us know in the comment section. And thanks for watching.